This is going to be video one of like I believe a three-part series that I'll be doing. Mainly that goes through my elements that I look for in trading. So the first video you see right now, which is powers of three. So your accumulation, manipulation, distribution, retracement, expansion. And then the second video will be based on standard deviation of powers of three and how I use them. And then the third video will be SMT pairing, and it will be more focused on catching like entries as well with SMT and how to use SMT to confirm. So I'll kind of just make this short and simple, and we'll jump into some chart examples later in the video. But this is your powers of three. So you have your accumulation, manipulation, distribution, retracement, and expansion. So usually you can measure these in terms of accumulation, manipulation, distribution, retracement, expansion, and then back into accumulation to restart the market cycle. But I like to look at it in like about 5 phases, because I think after every distribution you get retracements and then you get expansion. So here are the types of PO3 that you can see formed within a weekly candle, 4-hour candle, monthly candle, whatever it is. So the first one I like to look at is the devil's mark, where we tap into a high time frame key level and we do not print a wick above the open. I've done videos on this before, I believe, and I've touched on it in a couple of videos as well. But this is a really important one, because when we sweep this high time frame key level and we don't manipulate above the open, meaning if it's a bearish candle, we want to see a bullish move back into the open, and then you want to see some sort of high time frame key level hit with some paired with SMT, and you can find your entry and you can target the open. So like what it'll look like on a lower time frame is you have your open. All right, hold on, let me just delete this. So you have your open right up here. So you have your move here, and then it doesn't. Sorry, wrong thing. So you have your move here, and then we just immediately go down. So that, and then you look for an entry. So this is what it'll kind of look like. So if your open starts at here and we don't print anything above the open, and then anything below here is considered manipulation and we can take up to the open. It does not mean it's going to always expand above the open, but it means that it will, there's a likely possibility that we will go back up into the open. And if we don't expand or displace through it, then you can likely see that we're just tapping back into it, into a time-based premium that I've done videos on, and then coming back down if we're in bearish order flow. Our next one is our classic expansion. So this one happens on daily candles. I like to look for with like London, Asia, and New York elements tied into it. But this is just when we hit a high time frame key level. We have our open, low, tap into the key level, SMT, and then we fill the portion of the candle. And this is just your classic expansion. It can be used both bearish and bullish. And then you have your seek and destroy conditions, which you likely would want to stay out of, right? So this is when we have 2 high time frame key levels, and we've already swept London highs and Asia highs, and London lows and Asia lows. And then you can see your open, it prints a small body but large wicks, because it's meant to try to trap traders on either side of the market to birth accumulation, then to continue up into expansion. So another thing I would like to touch on in terms of powers of three is how they're used kind of intraday. I'll go over like London elements, so what I like to see, and I'll go over New York elements as well. And we'll kind of just touch on that. Into this chart, there are 3 kind of things I like to look for in terms of, I'll go over the monthly, and then I'll go over daily, and then I'll go over 4-hour, but they're all kind of relative to each other. But I would just want to show you guys how I look at the monthly and how I basically trade it. So I'll start to mark out each week, starting and then Sunday, 6 p.m. All right. So in terms of the monthly PO3, this is an example of a kind of accumulation / seek and destroy kind of condition of a candle where we're kind of just ranging inside of a marketplace, and there's no really clear draw. So the things that I like to look for on the monthly PO3 when I'm expecting some sort of end to it is I'm expecting a level of the previous month to be hit, whether it's a premium or a discount of the previous month. And then I'm looking for SMT. So in this example right here, you can see that we do sweep out this high. So this might start out like this first week is our accumulation week. And then what you can kind of expect is you can break down the monthly PO3 into 4 quadrants. So you have your week 1, you have your week 2, and then you have your week 3. And like I said, accumulation. Second week, we have our manipulation, and this manipulation is accompanied buy a SMT, which we'll go over later. And this is in the same week as well. I'll show you guys real quick right here. So yeah, right here, this SMT that we have. So this low, ES does not, it does not sweep it, but NQ sweeps it. So in order to confirm that this is the manipulation phase of our monthly PO3 and how this relates to intraday, is once we see this SMT, like here, I would not expect for this to be manipulation because this is our first week, right? This is just our accumulation week, right? This, like any kind of price action in here, we would want to avoid with our first week of the month and sequentially with our last week on a profile like this where it's just a ranging market. So in order to identify your manipulation is when we see SMT below the open. When we see SMT below the open, and it's somewhere between week 2 and week 3, right? Week 2, week 3 can be manipulation, but usually it's week 2. And yeah, so as you can see, accumulation, manipulation, distribution. So now we come and take out the week 1 high, which we will basically use, and then we have our final week, which is just our accumulation. So the market cycle restarts again at accumulation, and it's also towards the end of the first quarter, which is from January to March. So this is your monthly PO3, and we can use this, we can use to project these levels using standard deviation, but that'll be a completely another video. But as you can see here, our first day or first week, first day, first hour cannot be the high. It realistically cannot. So when we have this manipulation lower and we see SMT, then we can expect that this next week is going to print some kind of distribution to attack people that are in late shorts and have their stop losses above here. So the market's going to take them out, and everybody when this manipulation goes lower, everybody thinks that the market's going to go down. We're going to go hit these lows, but we're also inside of a PD array right here on the daily, which you can see this whole gap right here is kind of supporting price. So that also helps when determining the monthly PO3. But next, I'll go into the daily PO3, and here's a good example of our daily power of 3. And the reason I'm using this one is because I want to show you guys all types of profiles that I just mentioned earlier in the video. So this is your classic expansion, and this occurs after we have swept the Tuesday. We have created the Tuesday low of week, and we have already taken out Monday's liquidity, which is formed and built up right here. So this will occur when we have the open at 6 p.m. So this is just your daily open, but then you have your true day open at midnight, which you can also use to identify your. I use a mixture of both. So we'll mark out our midnight open. So as you can see, if we turn on, we'll turn on a sessions indicator to make this much easier to kind of spot. But so you have your Tokyo session, which is our accumulation, and then you have your London protraction. So this is a very small London protraction, but I like it because this London protraction is right below midnight. So this is when we have our manipulation below our opening time. So accumulation, small manipulation, but when we open at when New York, we have, this is also a late profile as well, I'll kind of consider, and also a news profile, FOMC. But as you can see, during 1 p.m., 12 p.m., you can see right here we're all going above midnight open. So when we want to consider our manipulation, are we below an opening time, and our opening time is either midnight, or are we or are we just buying the wick? And what do I mean by buying the wick? This wick right here is a representation of all the orders that are being filled through the smart money, and all the people that have their stop losses right above here at these highs. So when they're accumulating orders right here, retail is going to see this as resistance, and they're going to want to short this. But what we're doing is we want to make sure to position ourselves inside of the wick. So what do I mean? The wick of the daily candle. So we know on the power of 3, the open is fixed. So we have a fixed open. We have a fixed close, right? So we know the day is going to end at 5 p.m., 4 p.m., depending on daylight savings. But when we know that time, right? But what helps us determine the low and the high is relative to the open. So when the open at 12 a.m. or 6 p.m. and we are just kind of inside of this wick accumulating, creating orders, then you can expect a classic expansion. As we know as well, in our third week of the month, we're looking for buys, right? And we have buy side resting up here. And when I mean we want to position ourselves in the wick, it just means that we want to look for entries anywhere inside of this, inside of the wick, and we want to look for some sort of like breaker block, FEG order block that we can enter in, and then we can catch the expansion of the candle. And that's essentially what I like to see for a classic expansion, is if we know that London profile is going to sort of manipulate, and we also have a late New York profile, then we are going to look for our buys below the midnight open and below the 6 p.m. open. And that is your daily. Moving on to YM for this one, because there's not a lot of clean double mark PO3s on the daily or the 4 hour that I could find on NASDAQ. So I'll go over the weekly profile for YM here. So this is back from early on in March, and this is our devil mark profile. So right here, we have our true week open, which is our Monday 6 p.m. open. So usually I'm not really worried about what is going on right here during Monday's open, but I'm more focused when I'm looking at the weekly PO3. The reason why I'm using 6 p.m. open as our example instead of our 10 o'clock open is because this is instead of Sunday's open is because I prefer to just void Monday and then just watch how price action develops between Tuesday's open at 6 p.m. and the end of Friday. So right here, you can see this candle right here does not print a wick above the open, and we don't ever return above it. So what we can do is we can consider anything below the open is going to be considered our manipulation, and then this will be used for our draw. So this power of 3 is typically develops when we kind of have a lot of sell side liquidity that we need to reach, and there's a lot of displacement to reach it. So there's speed, and we are not in a hurry to go and manipulate first. So anything below, or go and manipulate first and then distribute, but we're just in a hurry to quickly return the liquidity and then come back. So we're looking on the 4 hour for this weekly power of 3. And as you can see, yes, we do pop up right above here just a little bit and form SMT. But what I'm more focused on is this development right here, because there's no wick right here. So when Tuesday, our low of week, hits a high time frame PD array known inside of this rejection block right here. So as I said, the market sees wicks as gaps, and as you can see, when we hit this rejection block and we hit consequent encroachment of it, then we can expect to look for buys. And where will we be targeting? We'll be targeting these highs right here that were left unfilled up until Friday. Notice how the market does not want to, it's not in any hurry to come and take out these highs because it's saving it for the end of the week for this profile, because this is our devil mark profile for YM. And yeah, so that's your final profile. That's your devil mark profile. And I'll kind of just go over into some more rules with the power of 3. And I want you guys to imagine that this is your weekly candle, and you're looking back after a week. Maybe it's a tough week, maybe you lost a lot, and maybe you kind of just didn't understand where narrative was going. But with using this simple concept of power of 3 and basically how the anatomy of a candlestick works is you have your open, high, low close, and your open, low, high close. So if we're in a bearish week, right, and let's say, for example, we open in a premium. So if this is, let's say, you have a range previous to this weekly candle, and right now this weekly candle is trading inside of that range, but let's say you open in a premium of that range, right? So you open consolidation because it's Asia session when we open the weekly candle. So you have your consolidation, right? Monday maybe will expand, maybe trap traders down here, so Monday will expand, right? It'll come back up, and then you have your high formed around Tuesday. And then Tuesday, then maybe Tuesday doesn't print the high, but what I look for is Tuesday and Wednesday, is I like to look for our manipulation. So if we're gonna assume that Tuesday is our high based on this model, then we're gonna go down here, go back up, low, boom, fill it around Wednesday, Thursday continuation, and then maybe Friday we go up here, and then the candle closes. So this is how you would break down a higher time frame power 3, whether it's a monthly, 4 hour. So when we pop above the open, this is our time-based premium. So what I mean, smart money is selling the wick. They are looking for sells inside of this wick. This is where the wick is where the power of 3 starts and where it kind of ends, is right. So when we have a opening time right here, which we know is fixed, and we know our closing time is fixed as well, then this level does not change. This open time does not change. So when we see the market pop back above the open, then we can assume that anything above it, and we also have, let's say we have SMT here that forms, right, where NAS makes this higher high, and maybe ES makes a lower low. That also helps you confirm the direction that we'll be heading, right? This works on any candle, but I'm just assuming this is a weekly candle. And this component will be broken down, and you can use this to trade intraday. So if we know that we have a drawn liquidity, let's say we have a fair value gap that's nested, maybe inside of this low that is untapped, or we have a we have a previous open that is untapped or anything like that, then you can use that to target it, and that will work. So a couple things when trading powers of 3 is when we are in a, like, let's say we're in a like a void profile, and let's say we're just kind of just chopping around, you usually want to wait for a external range kind of sweep. So like so let's say like this power 3 is kind of just like a shitty week. We've been doing this all week, up and down. Market's not really going anywhere. But let's say like it can happen where sometimes it's delayed, and we have a weekly profile where Thursday or Friday Wednesday or Thursday can form our low of week, which can happen. So let's say we have something like this, and then we go back up. Then the only way that you can confirm the manipulation is by SMT and the time of the day or the time of the week. And that's just a couple rules that I have in place for the power of 3 is I'm looking for SMT, or I'm looking for some kind of high taken above or below the open. And that is like imperative that you understand that, because if you're just blindly shorting when we make this high, then you're not going to understand. Like let's say this open is in a discount, right? And then we go below the open, but let's say your bias is messed up. No, the open helps you with your narrative and your bias and understanding when we'll create our high of week, because it'll almost always pop up above the open of the candle or the high of the candle. So we could get like a high that's formed, and then we could get another sweep of that high, but it doesn't matter because we're still bearish because we're above the opening price, right? All right, and for your homework, what I want you guys to do, and something that's helped me a lot when learning powers of 3 from other people. So I learned power of 3 through ICT initially, but I didn't get a deeper understanding of it until I learned about Trader Dexter, who's someone on Twitter. I'll plug him real quick. His name will be on the screen. And then also the power of 3 trader, and then I also learned it from romeotpt. I'll put his, but a lot of you guys might know who Romeo is because he's pretty big in the ICT space. But what I want you to do is I want you to open up any chart and break down the monthly power 3. So even if it is hindsight, I don't care. Even if it is hindsight, you need to look at past data, and you need to develop a model based on that past data to trade real time. I don't back test anymore, me personally. I'm only live testing, and I'm live testing my model through the market. So when the week opens, I'm marking out the open, the close of the week, and I'm marking out the open, and then I'm determining the low or the high based on SMT and based on liquidity alone. So open any chart and break down the monthly power 3. Identify the open, the low, the high, and the close. And then I want you to mark out where did we print the high and where did we print the low. Specifically, what time of day did we print it, or what day of week did we print it, or what week of the month did we print the high or the low. And then inside of that monthly chart, identify your accumulation phase, your manipulation phase. So your manipulation phase is likely going to be inside of a high time frame, PD array, whatever it is, breaker block, order block, rejection block, any of that, or a opening time. So previous monthly open, previous week open, or the current week open. You'll look for your manipulation. And then your distribution is where is the opposite side of the market? Where is the market most likely to reach an old high, maybe a PD array that's resting above an old high? You're going to ask yourself these questions, and you're going to journal them, and you're going to write down all of this stuff. And this doesn't go deeper than just one. I encourage you to look at multiple. Do this on the daily, maybe do this on the 4 hour, do this on any time frame. You really can do this on what I'm trying to tell you guys is that I'm not only looking at powers of 3, and powers of 3 occur on every single candle, 1 minute, 2 minute, 3 minute, every single candle. But when I'm aligning myself with high time frame order flow, I'm mostly looking at the monthly or the weekly, because then all we're trying to do is we're trying to capture the weekly expansion, the one shot, one kill that ICT likes to talk about. And that is from identifying these phases and identifying when they happen and where they happen, at what price level, at what time level. And this is how you will really get a deep understanding of PD arrays, powers of 3. And this is where you will kind of get most of your insight from the marketplace. So if you guys have any questions, please leave them in the comments, and I will be posting the next video on standard deviations soon, probably like in a day or two. Been pretty busy. So yeah, I really hope you guys enjoyed, and take it easy.